Hello, everybody, and welcome to the latest edition of the Sharesify podcast. I'm joined by my colleague James Crux, as usual. No Ian today; he's always somewhere else. How you doing, James?
Yeah, very well, Steve. How are you?
I'm very well. It's been a busy old week, and what's been surprising for me anyway, is the way that markets have been so robust. We of course had US markets setting new records on Wednesday. They've come off a little bit since then, but the futures market is suggesting that they're going to be ending on a positive note. So probably the S&P will finish the week on sort of flat to maybe slightly higher. Nasdaq looks like it'll do something similar, but it's been a bit unfortunate for the FTSE 100, not doing quite so well. Looks like it's heading for a sort of rough 3% decline. And I guess that's really down to the overall risk on mood. And of course, the FTSE 100 is not really a fast growing market. It's a more mature market, very income stock heavy. Talking about FTSE and fallen stars, James, I know you've been looking at today's biggest faller. Who's that?
Yeah, it's a company called MNDI. So it's container boards and paper bags. It looks a bit crumbled up like an old paper bag, actually, in share price terms. So it's down 65% on like 5-year view. Another big fall today on a Q1 earnings miss. The problems are really piling up for this business. There's
Yeah.
weak demand, rising costs. They've been shutting plants, and now they've said they're going to have to raise prices. So what that does for demand, we don't know. But yeah, it's been a tough session for MNDI.
Yeah, I mean, I suppose it leaves investors with this big question about is there some recovery upside, or is it just becoming a value trap because its share price has been under pressure for quite some time now, hasn't it?
Yeah, that's right. Yeah, I thought it'd actually be a cheaper stock, but looking at it on those depressed earnings, it actually looks fairly pricey, like 25 times trailing
Right.
PE, which is
Yeah.
below the kind of the sector average. So whether there's value there, given the scope for maybe further downgrades and a little bit more of a D rating, I don't know.
Yeah. Yeah. I know other stuff has been catching your eye. You were looking at supermarkets earlier this week. One in particular, which was that?
Yeah, another busy week for retail, Steve. So Sainsbury's, a lot of retailers blaming the Middle East now for downgrading
Right.
guidance.
Yeah.
So they're all slipping that excuse out. Sainsbury's, they downgraded profit guidance. Good momentum in groceries, but subdued trading at Argos. So Sainsbury's got greater exposure to kind of general merchandise than Tesco. So when people start to pull their horns in, they feel the pinch.
Right.
Um, and also another big story was WH Smith, where the Leo Quinn, the executive chairman, has done a bit of a kitchen sink job. Profits down sharply. He's axed the dividend. It sort of made me wonder whether they're missing the cash from that old high street business they sold, that
Right,
dependable
because
cash generation.
they stripped that out, didn't they? Because they're now basically a kind of trains and airports sort of operation, aren't they?
Yeah, they pivoted to travel, so it's very much planes and airports, and that obviously the geopolitical backdrop
Yeah.
is not too kind for them. Another one, ASOS first half losses narrowed. They need to do a bit more work on that one, but yeah, a
That's a
busy old
blast
week
from
in
the past,
retail.
James. That's us. Blimey,
ASOS,
that
yeah,
was a superstar a few years ago, wasn't it?
as seen on screen. Do you remember the
Yeah.
original name? Yeah. So a busy week in retail. What else has caught your eye, Steve?
Well, of course, it's just been a really busy week for US earnings. It's really starting to ramp up. But what's really I've noticed is there's been some really interesting tech earnings coming out. Intel overnight last night, amazing. I mean, its stock rallied after hours by about 23%. Now that's just an incredible leap forward, and it's simply because the market is starting to see Intel as a crucial AI infrastructure play rather than being a bit on the sidelines. Now, whether that's right or not, that's a big question. I mean, its PE is trading on about, I don't know, 100 times forward earnings. So the market's really pricing an awful lot of good news and the high execution. But I wrote about it. It's on our website today, and I go into a lot of detail about it. So if you've got the chance, listeners, go and have a read of that, and you can get all the detail. And the other thing that really caught my eye was again going into the AI space, AI infrastructure, and overnight on Wednesday, I think it was, or maybe Tuesday, I forget now. But there were some interesting clash reports. So you had Lam Research, you had IBM, and you had Texas Instruments. Now they're all big in the kind of data centers or microchips world in various guises. Texas Instruments shares shot up about 11% gains. IBM went down about 7%, and Lam Research was roughly flat. And it's really interesting to see why that might be. And again, I cover that in quite a lot of detail about what the market is now pricing in, and it's going beyond AI optimism, and they're now starting to demand AI accountability and execution, and where's the money coming from. So it's really interesting to see how the market is pricing not just earnings reported, not just guidance in the next quarter, but the whole narrative about, have you really got a key place in the long-term super cycle of AI, really?
Right, no, very interesting. And next week, another busy one. We've got second quarter results from Starbucks. I'll be keeping an eye on. So, investors want to know if the sales recovery in the US has kind of continued, and also perhaps how China is performing. A massive market for Starbucks, even though they've put the business into a new joint venture structure.
Yeah, I mean, I
yeah,
find it a fascinating company, Starbucks, because we've all drunk in their coffee shops, of course, and they're pretty much omnipresent wherever you are on the planet. But you start noticing, I'm sure everyone's noticed, you're starting to be asked to pay £4.50 for a bog standard cup of coffee, and you wonder. James, I wonder about where can these margins really go? I mean, when they're charging that kind of price for your bog standard latte and cappuccino, it seems that margins are going to be capped. Is that your impression?
yeah, I think you're right. I mean, perhaps they pushed the price hikes too far. They've had to kind of reset. I think under Brian Nichol, who's the kind of well-regarded restaurant CEO. So you make a really good point. Another one I'll be watching out for is Unilever next week. It's another big consumer name.
Yeah.
Consumer name. Unilever tends to get most of its growth from emerging markets, so I suppose that's what investors will be looking at. Where the
Right.
big brands sell well, and incomes are rising. Also, we'll
Yeah.
look for where that Middle East conflict's having an impact on demand for them.
Yeah, absolutely, because they are quite susceptible to oil and gas coming out of the Straits of Hormuz, more so than the Western world.
Yeah,
Of course, next week as well is going to be dominated by big tech again, and it's five of the Magnificent Seven all reporting. Four of them all reported after hours on Wednesday. Apple on Thursday. So on the Wednesday, you've got Amazon, Alphabet, Google, you've got Meta, and you've got Microsoft. So it's going to be one hell of a busy night. You can imagine analysts are going to really dread that session, because they're going to be busy scurrying away their updates. But I mean, again, it's really the key things to look out for are capex. And what's capex sound like? They're spending, £500 billion has been committed over the coming year on data centers and AI and so on. What's the trajectory of that capex, and what's the likely return on that capex? That's going to be a crucial point, and it probably will outweigh the actual earnings themselves. So narratives are really important at the moment. That's a key thing, and we talked about it quite a lot. So I guess, James, that's about a wrap, really. Keep your eye out for podcasts and so on that we're doing. Brings to mind, actually, we did a podcast yesterday with Joe Boyenfreund of the AVI Global Trust. That's our latest one. It only went live yesterday, so look on our podcast page and have a listen to that. Some really interesting conversations about how they're a bit unique in terms of the investment trust ethos they have, and also about how he discovers these hidden gems, which we all like to find out how these investment managers look for really cheaply rated shares and give you big returns over time. But okay, until then, have a good weekend, and get in touch with us if you want to at editorial@sharesify.com. Any comments, questions, feedback. So until next week, have a good one. Take care.
see you later.